Hey guys, welcome back to Snowball Investing. This is the July Freetrade portfolio update. As I do in all of my videos, what I'll do is transparently go through all of my investment accounts, show you how they're performing, and my sort of thoughts when it comes to buying, selling, and the market in general. Before I jump into the stocks and shares ISA, if you want to support the channel, you can do so by just liking and subscribing. It would be fantastic if I could get 500 subscribers by the end of the year. Looking at the stocks and shares ISA, the value of this now sits at £54,976, and the entire portfolio is up by £9,978. Looking at the monthly chart, it looks like the portfolio is holding up quite well. Given the amazing month we had last month, I was expecting quite a pullback, but to my surprise it's holding up well and is even up by around £4,000. This is good and bad. It's always good to see green. However, I want to buy great stocks at lower prices, so I am hoping there is a bit more pullback in the next couple of months because I've got cash on the sidelines and I'm ready to deploy it into some good quality stocks. What I like to do as part of my updates is benchmark my portfolios against a FTSE or ETF to kind of figure out if I would have been better off buying the ETF rather than picking and choosing individual stocks. So looking at the monthly performance, my portfolio is slightly outperforming at 3.76% versus the FTSE World ETF at plus 2.49%. But over the maximum time period, this is when I started the account, my overall portfolio is up by 15.27%, where the FTSE World ETF is actually down by 1.89%. So a nice little beat. Looking at the individual positions, let's kick off with Palantir. So this is up by 52% and makes up the majority of my portfolio and the gains. So this really benefited from the AI hype, and that hype seems to be holding the stock price quite well. There's not much to report on this. I'm just holding. I'm waiting for the earnings to see if the AIP platform is really bringing in that revenue. But for the time being, it's a hold, and I'm looking at other opportunities in the market. Next up, we have the FTSE World ETF. That's up by 4.44%. Another stock that seems to be holding up quite well is SoFi. This is still up by 16.96%. This was one of the stocks I really wanted to accumulate at that sort of $4 or $5 range. And historically, SoFi has a nice little run up and pulls back. However, it seems to be holding quite well. So I'm probably not going to buy any more shares just yet, but it's definitely one I'm keeping an eye on. If there is a pullback, it's one of the positions I'm looking to increase in this portfolio. Nasdaq is doing handsomely at plus 5.17%. I mean, the top 5 stocks in the S&P 500 make up most of the gains in that ETF, so it's no surprise that this one, which is a bit more heavily weighted in tech, is doing very, very well. Talking of technology companies, the next sort of 4 stocks, just to kind of highlight that performance. I mean, Meta's up 45%, Tesla's up 17.3%, Microsoft's up 24%. You've got Alphabet lagging slightly behind, although I did buy this at much higher valuations than some of the other big tech stocks in this portfolio. Next up, we have a position that's becoming a bigger and bigger slice of my overall portfolio, and that's SL Green Realty. So that's up by 29%. It had a pretty good run up in the past month because it sold a portion of its property in New York, which prompted the price rise. And as you'll see in some of my previous videos and my videos coming up, I've been moving from buying growth stocks quite heavily, which have now rallied up, into more value plays into dividend stocks like SL Green Realty. And I think it's good to have that balance and buy things when they're discounted, rather than just following the herd and FOMOing into stocks that are really rallying and there's a lot of hype behind them. Talking about dividend plays, another position I'm slowly dollar cost averaging into is Truist. So the value of this now sits at £867. It's one of those positions I think is undervalued. There may be some more volatility in this stock and some of the commercial real estate plays, not financial advice. But it's one of those I'm just slowly dollar cost averaging into the next couple of months, and hopefully I get capital appreciation as well as a nice regular dividend with some of these positions. PayPal is down by minus 27%, although I think it's slightly undervalued, so I'm hoping for a recovery by the end of the year. DraftKings, that's up by 58%, doing quite well. Ginkgo Bioworks down by 6.62%, again, the speculation play in my portfolio. And AMD is up by 23.01%, following in the footsteps of Nvidia, maybe not as much, but still doing quite well. For those who are regular watchers of the channel, you realize I have a new position, and that position is ticker symbol IUKP. So this is a ETF that tracks some of the biggest UK real estate companies and REITs. There are a couple of reasons why I bought this. The first is I don't personally own or manage any properties in the UK, and this is a way for me to get broad exposure across a large number of UK real estates, of REITs, without having to actually own and manage any properties, which is a plus for me. Kind of gives me that warm fuzzy feeling inside that I actually own properties without having to own properties, if that makes sense. The second reason is because it's been hit quite heavily, which is not always a reason to buy a stock or an ETF. But if we have a look at the kind of chart since 2008, you can see it's trading at pretty much historic lows, and there are obviously reasons for that. There is a lot of fear around the commercial real estate market. The interest rates are now 5% in the UK, which is looking to increase, which is probably not going to help. Although I am thinking long term, this is not a short term hold for me. This is a position I potentially want to hold for the next 10, 20 years. So short term pain may equal long term gain. So we'll see how this plays out. I'm not just dumping a lot of money straight away. I put £500 in the past month, and seeing how it will play out in the next sort of 6 months to 12 months, I'm going to slowly dollar cost average in, and it gives me a small dividend, which is always nice, and it gives me broad exposure to a large number of companies instead of one, which again reduces the risk. Looking at the rest of the positions in the ISA, Intel's down by 13%. Apple hit a $3 trillion market cap, which is pretty insane. And what I've learned from that is don't bet against good quality companies. But that's up 27%. Boohoo, not doing so well. That's down 59%. One of my biggest losers in this portfolio. Block down 11%. And Alibaba down 20%. The one other position I'm looking to buy into is Persimmon, which is a house builder in the UK, similar to the IUKP ETF. It's a position that is heavily beat up. I think there's always going to be demand for house builders in the UK. There's just not enough housing. Short term, this is going to be painful because UK interest rates, etc. But it's, again, a opportunity I think is going to pay off in the long run, but potentially not in the next 6 to 12 months. So potentially more pain, but I'm absolutely fine with it because it's an opportunity to kind of bring that average cost down for this particular stock. So that concludes the stocks and shares ISA. So let's now move over to the general investment account. The value of the general investment account sits at £13,489, and the portfolio is up by £1,789. Looking at how it's performing in the past month, it's up by 1.81%, so again, slightly beating the FTSE All ETF. And over the maximum time horizon, it's actually outperforming my ISA. It's up by 18.33%, where the FTSE All ETF is down by 1.89. In terms of the positions in this account, they're not too dissimilar from the ISA. So the big tech's doing amazing. Meta up a huge 80%. I wouldn't be surprised if this at some point goes plus 100%. Google doing well. Amazon, that's up 21%, a much larger position in this portfolio. Microsoft up by 26%, and Intel down by 5.49%. Starbucks being pretty stable, that's up 22%. The only position I'm looking to increase in this portfolio is Enphase Energy. It's been beat up a bit. I think it's a growth story. I think there's a lot of growth to the solar energy sector. So it's one of those positions I'm just putting a little bit of money into every single month while the price is low. JP Morgan is up 18.64%. You've got Oatly and Neo, which not doing so well. No real change from last month. And Rocket Labs, I should have probably bought a lot more of this stock. It's up a huge 48%. I think there's probably still opportunities for it to kind of come back down if there is any pain in the market. But yeah, keep an eye on it. If the price falls down, I will look to increase this position. So that was a quick whistle-stop tour of the GIA. So let's now move over to the Vanguard account. The value of the Vanguard general account sits at £11,140. 95% of that is made up of the S&P 500 with a little bit cash on the side. It is performing pretty well for an ETF, so it's up 15.07%, and I've got a recurring payment of £200 into this. I'm not going to get rich off this short term, but it's one of those I'm just going to accumulate, and 20, 30 years down the line, I'm going to be very thankful that I set this up. So yeah, very happy with the performance of this portfolio. So that concludes the July portfolio update. It'll be great to get your comments, feedbacks, criticisms down in the comments section below. It'll be great to kind of chat with you guys, hear what you think. But that's it for this month, and I will catch you in the next month's update.